The British pound saw a modest move higher today, but come on, let's face it, today's trade was really about the dollar and the central bank in the U.S. versus the central banks in other areas, and Brexit and all that took a break today as dollar weakness was really feeding global currencies. The pound was no exception to that today. So we saw it get up as high on Monday, as high as it's been since going back to early November, late October, and we've seen a modest pullback since then. We're still at the top end of the range. I mean, the trend is still your friend. We haven't really broken that yet, but certainly the what if question keeps popping up. And how much longer can we continue to see this momentum when the uncertainty and the time to expiry, we'll call it, the time to Brexit is drawing closer. So right now the pound really has been benefiting from a hope trade. And I think right now we're starting to see that hope trade start to crack, albeit with a modest nudge higher today based on the dollar. So technicals still look pretty positive on the pound. Whether or not we're going to break out of this range that we've been in the last 3 months is uncertain, but the year-to-date move has been pretty solid, and I don't see any reason until we get some clarity as to any major pullbacks versus the dollar. Against the euro, it's a different story, but certainly versus the dollar, we'll have to continue to wait and watch. Now, if you look at what the Bank of England is talking about, Governor Carney, he's been very forward about the idea of a hard Brexit being very negative. If you go back to the December 20th meeting, since then the pound has really appreciated very, very quickly with the idea that they're going to find a way to make it happen. And again, as the aforementioned hope trade comes into play, I think he's sort of nudging that along a little bit. Certainly, the Bank of England wants to be more aggressive. They want to raise rates. They've got wage issues there. I think they're going to probably find some kind of a split vote in the near future if they are forced to back away from their more hawkish stance based on a hard Brexit, something that I think while everyone's talked about, no one really expects, or at least expects today. And I think that is going to be something that the Bank of England is going to have to continue to deal with. What to do if? Because that's a whole different ballgame when it comes to monetary policy. When you talk about the economy and you talk about what's happening internally there, when you throw in all types of new trade agreements, you talk about new borders, you talk about all kinds of different customs, there's a major shift that's going to happen economically there that could prevent them from doing what they want. And then you end up in the place where nothing happens, and you probably may even see them have to flip to the other side. But right now, Governor Carney and company still want to raise rates in the near term. They haven't done it, but they're going to continue to talk that way at least until we get through the Brexit. And then after that, it may become an action story. We'll have to wait and see. And lastly, yes, the hard Brexit is more of a global issue. We heard that today from the mouth of Jerome Powell in his press conference after the FOMC meeting, where the Fed did nothing, and it was more about the concerns. Yes, how will this feed into our financials? How will this feed into our policy? How will this feed into our economy? And the U.S. is not alone. It will certainly be something that makes its way into all financial systems globally, as London is a hub. And likewise, I think that with the changes that are happening in the UK, it's maybe sort of a blueprint for what might happen down the road if someone else decides to leave the European Union. So right now that hard Brexit, which was talked about but I don't think taken seriously, is now really coming into focus. At least the odds of a hard Brexit are equal to that of a soft Brexit, and that's not good at this point. So right now I think that the world taking a very hard focus on what's happening in London, in the UK versus what's happening with the European Union, and the odds of a 50-50 chance aren't good. Because if you have a 50-50 chance, it's still a coin flip. And I think right now, Federal Reserve Chairman Powell is mentioning that, hey, in his speech today, in his testimony, hey, get your act together. We don't want to have to deal with this in 2 months on top of what we're dealing with right now in the U.S. So I think right now the pound will continue to rise. You've seen it have a pretty big move against the euro as well, which is backed off this week. And I think it's because those odds now are back to 50-50 or closer to something like that in whether you get a hard or a soft Brexit. How the pieces all fit together at the end is still yet to be seen, but you can pretty much watch the pound euro cross, and that's going to tell the story. And right now we've seen a very strong pound versus the euro, but it has backed off since Monday, since a lot of this uncertainty has started to rise again, and will continue to do so until March 29th when we hit that line in the sand.